Hey, we're gonna get going here today, and I got to tell you right now, and right be up front, is this one is all about wheat, okay? And this is for our wheat producers out there. It might get a little bit long. I have to go through three classes of wheat, but we just think that there's things that's really important for wheat producers to recognize on what's going on in here right now. The first thing is after this last supply demand report, the bullishness from the wheat report is this world-ending carryout levels as it dropped to a 7-year low. You can see the decline over the last 5 years. These lower world carryout levels, especially coming from our export competitors, can put some support underneath this market. As we roll to the next one in here right now and we look at all US wheat ending carryout levels, it does increase slightly here from last year, but it's still the second lowest in the last 10 years. So these drawdown in ending carryout levels can offer this market support. Now, if you're a big bear in the market, in the wheat market, what you're really focusing on is exports and reminding everyone how slow exports are. But it's also important to recognize that the USDA is forecasting exports on wheat to basically be at an all-time low this year. So as we look ahead, if we do get a pickup in exports, it can dramatically change the supply-demand tables. That's the big picture in here on the wheat side of it. But we think it's more important to break it down by class. First off, we want to look at spring wheat. Here you've got U.S. U.S. spring wheat stocks, and looking at them here, they're really the lowest level in the last 15 years. That can offer some support, especially if we can get a pickup in export business, and that's where the lower Canadian crop can offer spring wheat futures a little bit of support as well. As we go to our weekly chart, and this goes back to the last 5 years, you can see we've really traded on spring wheat between about $5 and $13. When we just put a simple retracement on, a 50% level comes in at $9. And then you can see a common range in there is between 8 and 10. We don't ever want to get caught by saying a market is too cheap, but when we look at the carryout levels on spring wheat, we consider the smaller Canadian crop. We've got a really view in here that Minneapolis wheat has some pretty good value in the 775, 750, or really anywhere below $8. We think that the spring wheat market does offer us some support in here right now. As we look to the next slide in here, what's important to recognize is seasonals. We discussed these here a couple of weeks ago. Seasonally, spring wheat puts its low in here at the end of September and a pretty good rally into the month of November. In front of us is both the 5-year, which is the red line, and the 15-year, which is a black line seasonal. Seasonally, we have some strength coming up here in spring wheat. As we flip over to hard red winter wheat, you can see with KC wheat stocks, they're up slightly from a year ago, but still the second lowest in the last 10 years. If we put the same retracement levels like we did on Minneapolis wheat here on this KC weekly chart, you can see we're really at that lower end of the range. We've had a 375 low in the last 5 years and about a 1250 high on the war rally that we saw in 2022. So when we look at KC wheat, the lower carryout levels, it should offer support, but we're not quite as low as what we have over on the Minneapolis wheat market. We like KC, but we like Minneapolis a little bit better. Looking towards the seasonals on KC wheat, you can also see they tend to bottom out in here at the end of September and the early October timeframe when you look at this cash market. We just think after the supply demand report, we are putting some support underneath here, especially on the cash. Look for a rally to occur. Getting over to Chicago wheat, you just don't have the bullish fundamentals there like you do over in either spring wheat or hard wheat or spring wheat or winter wheat. But you can see here this ending carrot level is more the mid-range over the last 10 years. As we look towards a weekly chart, though, on Chicago wheat, you can see we've broke much more than what we have over on the spring wheat or KC wheat futures. Looking here on the seasonals, just like the other two wheats, we do tend to rally on cash wheat from the end of September, early October timeframe into the end of the year. As we want to wrap things up in here today, I think it's important that you look at each class of wheat separately. We have to respect the seasonals. And when we look at each class of wheat and we look at seasonals in here, we like Minneapolis to the higher side if we have a rally going on in here. The other thing you need to keep in mind with wheat is that we're starting to see carries showing up in the market. Carry is very difficult to fight. You look at front month Chicago, the September contract, which is expiring near 570, that looks more positive. But you got May 24 already at 640. How bullish do you want to be out there? I think the wild card on wheat as we move through the winter months is exports. If exports pick up at all, especially for hard red spring wheat and even hard red winter, that's going to tighten those carryout levels significantly and offer this market a bunch of fundamental support. Where we struggle in this wheat complex is fundamentally you have much more support over on KC or Minneapolis, but it's Chicago where the specs have the big net short position if there is a spark to get this thing running. We just thought after this last week's report and getting to a time of the year when cash markets can seasonally rally that we took a step back and looked at this wheat complex. If you have any questions, feel free to give us a call. If you need some copies of these charts, let us know and we'll be more than happy to email them out to you. Have a great day.